Wednesday, April 17th, 2019, Maneco 64, home of alternative economics and contrarian views. This morning I want to talk about the stock market and specifically the Dow, where it could go. I made a video in September of 2017 when the Dow was around 21,200, I think, just above 21,000. And I spoke how the Dow could actually go to 28,000 and then turn around. One of the viewers reminded me about that video the other day. So I've looked at that video again, and I've looked at some interesting charts that I used in that video, and I'm going to update you on the Dow and where we could go on the upside as well as the downside. And I will also cover briefly an interview Alan Greenspan did with CNBC. Alan Greenspan says economy will start to fade very dramatically because of entitlement burden. Well, it's all the baby boomers. As he says, it's impossible to solve the problem of demographics. You know, the population is getting older, and that's going to keep going until 2030. It's going to crowd out private investment, as he says. Before that, of course, we'll have a quick look at what the markets are doing this morning. It's 7:35 a.m. London time, so we've got spot gold at 1278.80, up about $2. The range has been 1275 to 1280, so gold has rebounded a little bit. Silver is continuing to outperform from yesterday. I did a video late yesterday if you want to see my views on what gold and silver are doing in general. Right now, silver's up 7 cents at 15.06, or up 0.5%. Range has been 14.97 to 15.08, so we're near the top of the range. Stock markets yesterday, I saw the Dow was up about 60 odd points, but it was up a lot in triple digits early on in the day, so it fizzled out. Right now it's up 9, the Dow futures at 26,450. S&P futures up 3.25 at 29.10, and the Nasdaq 100 futures up 17, or 0.25%. Currencies still very steady. Yesterday I noticed that the pound or sterling was the only currency that lost a little bit of ground. Right now cable is at 130.60, up 12. Euro is at 113.08, up 0.25%. And up 12, I mean pips for sterling. So it's up only about 0.1%. The dollar is unchanged against the yen, just below 112. It's at 111.98. And actually, we're seeing the dollar lose quite a bit of ground against the Chinese currency, the yuan. We're at 669, down 214 pips, or 1/3%. That's a big move there. We're seeing crude oil 64.56 WTI, that's up 40 cents, or 2/3%. Brent is at 71.66, up 1/3%. Bond markets, the 10-year yield has continued to creep up. We're almost back up to 260. Yeah, we are at 260 right now in the 10-year yield, so yields are continuing to back up to go higher, and so bond prices are going lower. The 3-month T-bill yield is at 244, and the 7 years at 250. So that's a sign that the curve is steepening again. It's not inverted anymore. So yeah, it looks like the curve is getting back to normal. It's disinverting. It's not inverted anymore. For now, of course. Alan Greenspan was asked about the yield curve. He says it has been a good indicator in the past, but he doesn't use it himself that much. So let's look at the Dow, the technical picture. As I said, the Dow could go to 28,000. I said that in September of 2017. So almost 2 years ago, and we were at the time at I think 21,000 or so, maybe 22. And this is how I got that projection. I took a logarithmic chart of the Dow Industrial Averages, a quarterly chart, of course, going all the way back to, let's see here, 1920, fourth quarter of 1920. That's as far back as barchart.com goes. And you can see here, the roaring 20s, when the stock market, let's see where we were in 1920. We closed around 66.75. We closed around 72, the Dow. That was in 1920, fourth quarter. And in 1929, it topped at 386. So it was a pretty big move here, as you can see, percentage-wise, one of the biggest moves ever. And then it dropped, of course. We had the crash of 1929. But not only that, it continued dropping all the way to the third quarter of 1932, where the low was 40.56. So it was a huge haircut in the Dow. And of course, that brought in FDR, that brought in the bank holiday in 1933, that brought in the reset of gold with the Gold Act of 1934 in January, when gold was, the dollar was devalued, gold was revalued from $20.67 an ounce to 35. But that's a different story. But as you've seen here, I've done some technical studies. I drew a trend line from that top in 1929 to the top in 2000 at 11,750. And that's where I got my 28,000 from. Because, let's see, when we made a top last year, that was the resistance there. It was around 28,000, 29,000. So the high last year was 26,951. So 27,000, about 1,000 points below that 28,000. Right now, if I go to the trend line, it's just below 30,000. So yeah, we could see the Dow continue to go higher here. I think the powers that be, the Federal Reserve, the Trump administration, they're all aware that you need to keep the stock market elevated, especially when you've created such a big bubble. We saw what happened in the 1930s when the stock market crashed, from 1929 to 1932, what happened afterwards. So they're very aware of that. I recommend you read this article on CNBC. Alan Greenspan says the economy will start to fade very dramatically because of entitlement burden. And also listen to the interview he gave to CNBC. I'll go over some of the general things he said here. Basically, he thinks the economy is highly dependent on the stock market. He thinks in the short term, the economy could continue to do fairly well. He noted that the stock market drives the economy. He said every 10% move higher in the stock market leads to 1% GDP growth extra, with a lag, of course. He noted that he thinks this is only short term. He's still very concerned about entitlements, which is, the Social Security, Medicare, Medicaid. He talks about the demographic time bomb, all the baby boomers retiring. And that's going to keep going until 2030, that it's going to crowd out, every dollar that's going to have to be spent on entitlements is going to be a dollar that is not going to go into investment into the economy. Yeah, and I think the way he talked about, the stock market and GDP shows that we have an economy that's not healthy. And we have, the powers that be they're manipulating the stock market to keep the economy from collapsing. Stock market should be a reflection of an economy. It should, this is more like the tail wagging the dog. That's what's happening here. Happened in the 1920s. And why is that happening? Well, because we have a central bank that manipulates interest rates and creates credit out of thin air, creates bubbles, creates moral hazard, and forces people to go into the stock market and makes the economy dependent on that. And even Alan Greenspan, the interviewer, asked, well, don't you think interest rates are going to go lower, though? That should be good for the stock market. And he said, well, the Fed funds is a completely different story. You need to keep an eye on the 10-year yield because, that is, the Fed can't control that completely. And he also noted that we need to keep an eye on the spread between the 5-year and the 30-year. 5-year note yield and the 30-year bond yield. He thinks that if that spread continues rising, it's a sign that we could have inflation. He thinks we're going to get inflation. And I agree with him. And what do I mean by inflation? I've said in the past that we've had the inflation, which is the creation of money and credit. What I think he meant for the public is the rising prices, the loss of confidence in the dollar that we had in the 70s when we had the stagflation. He thinks that's inevitable. And I agree with him. They're going to have to keep monetizing the deficits. And that's a road that's not a good road. And the deficits are not going to get any smaller. So there you go. Where could all this lead? And where can we look in the past to see where we had something like that? Well, Weimar Germany. You did have the hyperinflation there in the early 20s that culminated in 1923. If you had your money, of course, in the bank, you would have lost all your wealth because, it became like confetti. The very rich, the very wealthy, of course, they probably protected themselves well. They actually did fairly well in the stock market, holding companies that produced real things, industrial stocks. The stock market in Germany didn't do that badly compared to the dollar. Of course, gold did very well. Am I saying that people should be in the stock market? No. I mean, that's for each and every one of you to know what you're putting your money in. If you feel that, an investment would do well in a time of crisis, hyperinflation, or even we could have a stock market crash. So, and even it doesn't mean to say that what happened in Germany will happen here. And you have to be very careful of each individual company you invest in. So where could we go to the upside then? It looks like that line is around 28. I mean, it was 28,000 in the past, in the last year or so. And I was looking like a year ahead in that 2018. So we didn't quite get to 28,000. We got to 27. And now that line is upward trending. So I would say, 30,000 could be a possibility in the Dow. But, and if we break through there, I think, as you can see historically, it's uncharted territories in terms of valuation, in my opinion. On the downside, you can see I drew another 2 lines. There's the middle line there that seems to be an important line where we've seen the market supported in the past. That line right now is around 20,000, you can see there. And then the lower line, which is basically the support trend line on the downside. And that right now is just below 7,000. So what are we going to get? I think we are near the point, and I don't mean tomorrow or next week. This could be months or a few years. We're near a point where we're going to get a hyperinflationary collapse of the currency or a deflationary crash of the currency. Either way, I think it's important to have some kind of insurance, as I usually, talk about physical gold and silver. The stock market, I'm going to stay out of it and look from afar. I'm not going to get involved. If you enjoyed this video, make sure you hit the like button. If you haven't subscribed to the channel yet, think about subscribing. Make sure you hit the little notification bell above to be notified of all my new videos. You can follow me on Twitter, Steemit, and DTube as well. I wish you all a great day. Take care. Bye.